Hello guys, glad to have you on board again. Today we're not going to talk about the bitcoins and cryptocurrencies today, simply because there's absolutely nothing to talk about. I mean, yesterday's barely no trading day, no volume, no price movement, so we're just still digesting the recent volatility. Just got to the downside, to the upside, and still right in between right now. For 3 consecutive days, or at least 2 consecutive days, and today might be as well. So until we manage to have some new information to talk about, we're just going to not talk about it, as there is nothing else to say. So waiting for new infos to come regarding cryptocurrencies. Things are moving elsewhere in the trading planet on other asset classes, as we have another drop of 3%, opening at the high, closing at the low after a bearish gap on Shanghai, which is not good at all. They really have a sharp decline, and it isn't doing great. As we're breaking down after such a fucking nice bearish trend already playing its game. So it feels like it is the final stages. I still forecast the price to stop in the next. This is probably the final wave, which means that breakdown might not necessarily be something you want to sell, okay? So consider this as the breakout area, and I think this is the mid part of a range. Question is, that range, is it going to be like that, which means in that perspective you want to buy this, or is this the extended version of that range that goes in here, and then you might want to wait a little bit more. So I'd suggest, for some reasons, at some point Chinese equities are not going to be that bearish forever. There might still be some interesting things to do, and if we're good to have a look at this in a broader perspective, what we're having here is clearly you don't want to buy this. Okay, even though this might be just a range breakout, we're breaking down major long-term areas, which means there might still be a lot of potential to the downside, and this could be a weekly breakdown. We're really breaking down in here, and this is the worst case scenario, because if for some reason you try to buy this, and if the weekly candle closes like that means that we're going to have additional bearish weeks to come, which means the 30% drop that we had on Shanghai from the recent size that we've made on 2018, and we're still in a consolidating market, meaning the previous bubble in 2014 has been correcting 48%. So for now, since that market top, we're pretty off topic. So obviously that market won't fall forever, but I see obviously no reasons to just buy it right now. So Chinese equity is still collapsing. Still a worry, really something we should be worried about, because most of the growth we have in the world, in the entire world, comes from China. Even if China is just a country that has its own economy, all other economies are related to China somehow because of import and exports, because everything we just happen to buy or sell in the world is half built in China, or at least is built out of Chinese parts, which means anything we have and own has some Chinese parts in it. So if China is doing wrong, if China is doing bad and is about to reverse in the worst recession they ever had to suffer from, then how the hell can we just keep on thinking that we're going to have growth forever in the rest of the world? It's not going to work out that way. Otherwise, the world would just have to manage its way out of China. But the problem is China is just building things half the price everybody else is doing. So once again, how can you create value if you have to produce things that your people needs, but you have to produce it with twice the price? So either everybody is going to be really poor and not being able to buy that stuff, which means recession down the road, or we simply can't manage this recession down the road. So obviously it's about to come. It's just a matter of time, because we've been doing stupid decisions recently and we just kept on going that way for a long time. So lots of bearish potential underlying those markets, in the Chinese market especially, if things turn out to be bad. So we'll still have some signs that we could find some bullish support in here, in that area. Really, we could. Okay, because if you have a look at the cycle in a cycle perspective, the one I do use as well. Damn it. So in a cycle perspective, we might just be reaching out to a potential bullish target, and as you can see, the momentum as well has been making a higher high. So it is not that bad actually. It's just it could be if we don't manage to find the bullish support we need in that area. So Chinese market should very well or better have to find some support in here, because if it doesn't, and if we break through that area, it means we're a strong bearish trend in the Chinese indices, which, and I'm sorry to say that, and I stand on this, is the worst case scenario for the rest of the world. We've been ignoring Chinese alerts recently, especially Wall Street's been annoyingly forgetting about this. What if we just had to price this in after doing the opposite for quite some time? I mean, it's basically the divergence started all through January 2018. In here, we clearly had some bearish, strong bearish signal coming out of China. And if you just pile up the SPX that's in here, just compare it to the SPX, you'll see the difference is really stunning. And if you even compare it to NASDAQ, it's even the worst case scenario. So look at this. I mean, don't you see the strongest divergence ever? I mean, even if Chinese were about to just pick up, and if that divergence were just about to, you know, narrowing or divergences get to convergences in the end, which means we can just rise in China and fall a little bit in the US in the US equities. But the problem is, if this is just keep on falling, obviously Wall Street will have to pick up at some point. But the problem is, we'll have to pick up from fucking long times in here. Everybody's going bearish back then. As you can see, everybody's going bearish. That's normal. It's what we call cyclical. All the major equities in the world are linked. I mean, they have correlation. When someone goes down, everyone goes down. Then we have different amplitudes. I mean, that some can break down supports when other will hold those supports and break resistances. But when it goes up, everybody goes up. Okay, it really is like that. We've got cycles breathing in and breathing out, and everybody is breathing with the same pace. It's just some are breathing in stronger than the others, and some are breathing out stronger than than other indices. But still, they have positive correlation that has always been there. In here is not working that way. You can clearly see all markets are doing exactly the opposite. US are rising in here, China is falling. This never happens that way, never ever. So what we have in here is clearly a not a manipulation, but call it a distortion on the market. And those distortions generally don't last long, because when you have positive correlations that have been in place for literally every single fucking time in the market history, then how can this be different today? It's just because obviously Trump has been piling up shit on China for weeks and months right now. I mean, China was the bad guy in here. I mean, really, do you really think that, do you really see this that way? So it could be a problem at some point to just try to knock down the Chinese guys, because if you take them down, you're going to go down as well. So it's a problem. At some point, they're going to have to stop this stupid game, because it's been profiting the US, but it could be the worst case scenario if it gets the reverse, which means at some point, US are the only equities in the world that haven't been pricing any single risk. Nothing is priced in by the US indices, and the last time in history that we've said something like that, that we've seen something like that, I know I'm going to say that because before you get any further, I'm not a fucking perma-bear trader. There's nothing close to this. You can watch out videos of me a few years back from now. I was actually doing the exact opposite when everybody was just panic selling back then in 2016. I was there buying the fucking dip. So yes, I'm ready to buy when timing says we have to buy. I'm also ready to sell when timing says we have to worry and we have to sell. So Eurozone indices, I think, really strong support area, but we don't see that much of a support coming in here. So we'll see about that. It's either all the worldwide equities will just find out that, okay, we're still doing good and we're going to hold those supports. So I think in here, selling is stupid because we're basically selling supports. But the problem is, do you really want to buy? I think the answer is no as well. So it's neither buying or selling those supports. I mean, in the euro area, because in here, to me, we're clearly working around supports. Problem is, to me, in the SPX, we're nothing close to working out supports. We're just working stupid prices in here, and I think those supports in the US equities are here or even there, which means we still have a lot of bearish potential. So selling the US, I'm fucking okay with that, because we've got a lot of room to play out in here. Now I want to change and switch to something just because we're nearly getting there, so I'm just going to be straightforward in here. Okay, last time we had a similar context in the US is in here. Okay, in 1987. It's basically 19th of October 1987, the fucking day I decided to born. I was born on that day, so the day of a crash, meaning that at some point the market just wanted me to be coming to hit sooner or later. So anyway, so yes, it's not just about that. The thing is that back then the context was similar. The equities were just trying to rise at a stupid pace, a stupid parabolic pace. Everybody was just figuring out, okay, it's going to go up forever. Everybody needed to be invested into equities because this is where we created money back then. So everybody was just trying to figure out how can you not be trading? How can you not owning stocks? Because this is where the money is exchanging. This is where we make money. Problem is, the context really turned out to be really nasty reversing, and we basically went back to, which this is the equivalent of 2015 for us, okay? This is it. The moment we terminate wave 3, we pile up wave 4, and then we go to that stupid wave 5, extended, overextended, really stupid pricings. First, you got the volatility returns. Should it be red sign, okay? Taking profit patterns triggering. And then the market rises again for no reason. Basically, back then, the price were concentrating on just a few stocks, just like we do today. Okay, it's just about Apple and the big names right now. It was exactly the same shit back then. Everybody was owning those big names because they were thinking that they will go up forever. Problem is, when it started to fall apart, the Ponzi scheme just collapsed entirely. Okay, and we went to what terminated to be 19th of October 1987. Worst day of trading ever in the entire history. The problem is, we have pretty fucking similar patterns today. Lots of inexperienced trader invested in the market without even knowing they are, meaning back then they were aware of it. They were exchanging coupons and things like that to buy and sell stocks. It was just a stupid mess. And we didn't have a complex market like we do have today. So even back then, when things were pretty much simple and we just had to care about psychology and the technicals weren't necessarily at playing back then. We didn't have that much liquidity either. So today we have extended amount of liquidity, but this is a false liquidity. This is a false flag we have in here. We have a lots of liquidity, but this is robot liquidity. I mean, the robots can just decide not to trade, and if they don't, we have nobody to trade. And we've got still lots of inexperienced trader trading the market without even knowing they do, because lots of them are just invested throughout the market because of their mortgages or things like that, or just their passive investment things. They just don't have a look at the market as long as the market is rising. But whenever the market will start falling, they will lose money. And everybody who loses money has the same behavior. They just want the fucking money back. And when this happens, this is what you get. When people ask for the money and there's not enough money for everyone, the Ponzi scheme collapses. So, now back to today. What do we have? Exact same fucking parabolic scheme. Wave 4 retracement, just as we had back then. Then we've got the warnings, everybody's ignoring them, and then the market started to collapse. And the problem is, everybody thinks we're going to rise again. Take the lesson of what happened back in 1987. Everybody thought this was, okay, so 1987, we're here. Everybody thought we were going to make historical highs afterwards, probably thinking that the big names will be the leaders, they will go up forever, so everybody thinking that Apple is going $300 or whatever shit this is. They might just have been thinking the same back then with other assets. Just today, these are the big names we want to buy, thinking they will go up forever. Problem is, liquidity is lacking right now. We're probably going to switch to bear market. And the problem is, it's going to be nasty because money has been concentrated in too tiny places, which means not enough money for everyone when we'll try to get out. And we'll obviously have to do it. What has been breathed in, when you breathe in, you breathe out. It will come up. The problem is the liquidity won't be there, and probably an experimented trader will do what they always do when things turn bad. They want the fucking money back. And they're not going to they're not going to say, okay, you know what, we're going to wait and take rational decision. This is irrational exuberance to the bear side. It's not going to last forever. So, okay, I'm going to buy and hold. No, they're not going to say that. They're just going to say, give me my fucking money back. Even if it means selling at the lows, I'll sell. Do you get the point? This is not going to be rational decision making because people will just want the money to live, to just live their life. They'll say, okay, you know what? Today I'm ruined because of your shits. My mortgage is just worth shit. I've been working all my life to get and spare some money to pay for my future, for my last days, and you just ruined me with your stupid risk taking. Because most of those guys, they just don't even know what's about to play. They just put the money in their mortgages. The guys are investing this in the markets, and they just took enormous amount of risk with money they don't have, because it's basically trading with someone else's money. So this is what we're currently into. It is a very dangerous time. I've been really clear about that with you guys recently. The problem is, every year, we've got 1987 here to remind us about that problem we are facing right now. The problem is, last year we had those same problems. The thing is that the maturity of the market wasn't there to really show the red signs. What we have in here is the fucking red flag. I think we're not going to go making historical highs again. I think we just made the fucking market top. We're just going to range a bit before going to the nasty parts. It can take a few weeks to build. As look at what happened back then. Okay, so we're just going to copy once again. Really get inspired, get yourself inspired from this. Doesn't mean we're going to replicate that. Just says that if we're at that stage, okay, if we just made this, first signals, first alarms, we're retracing back to supports. The market just made a pullback and then went totally crazy in a straight line. So if this is what's about to come, the market retraced back to 2014 level. So going to today's replication, we might just go fucking there, which means I think we're not over yet. We might be go a little bit lower, then we're gonna range for a few weeks, month, probably have the year-end rally, okay, Santa Claus rally, call it however you want to go call it. I think we're gonna have a pullback. Normally, probably to terminate the year at a decent level with a positive year. Okay, we started 2019 here. I think we're obviously going to close higher than that. The thing is that starting first day of 2019, I think big problems will be ahead, because we're probably not going to make new highs. We're going to search for support pretty rapidly, and then the problems might just show up as we go down, because when we'll stop breaking support, people will ask questions, and we're going to break more supports and more supports and more and more and more, and people will just go to panic. And whenever panic will be there, you know you'll have to take your profits. And the problem is, if we take the 1987 as an example, this is where people will panic, which means fucking lower pricings. And the market could just lose 37% or 35% in a fucking straight line. Won't necessarily be a problem. It would just be normal. It's just we've been irrationally rising for 2 years from now because of the Trump shit. And I standed on this, and I said that the first day we had the Trump bullish wave, the Trump trade, we're going to have the Trump crash. I'm pretty damn sure about it. It's just, I think, a matter of time. Obviously, it's not going to take more than that. It's obviously going to be there before the end of its mandate. Question is whether we'll have it or not before or after the midterm election. I would say after, for decent reasons. I don't think we're going to collapse just right now. I think we're just going to show the early signals of problems ahead, but I think the big problems will show up after the midterm election, probably early 2019. This is where we're going to switch to really bearish market kind of signals. But I think right now, I need to stand on this. I think we found the fucking market top. Lots of people will just wait for this to be played. I think my job in here is to say what I think and share that with you guys. I think we have it. Pure and simple. I think we're not going to go higher than that. I think everybody thinking that is just stupid enough to be thinking about buy the dip situations or things like that. The red flags are there. everything shows that the risk is just all about red. And until you've been proving me wrong, I'm going to think it that way. Meaning every fucking pullback, I'm going to sell it. No problem with that. And if we start breaking major supports, you can be damn sure I'm going to pile additional bearish entries. I'm waiting for this for quite some time. Some people are kind of nagging me, telling me, yeah, Phil is bearish for years now. No, I'm not bearish for years. I'm basically bearish since then. I started being bearish in here and searching for bearish entries. Okay, everybody just told me, okay, Phil, stop selling. The market is just rising crazy. Okay, but stop selling. When this happened, I took huge fucking gains and everybody was there. Okay, but you know what? You're selling since then. I'm not holding the selling entries. I'm the speculator, which means I'm speculating here, stopped out, speculating here, stopped out, speculating here, stopped out, speculating here. Fucking worked. I'm speculating since then as well, meaning I took that short entry as well. I tried to short in here as well, in here as well, and tried to short in here as well, in here. This one worked. Yes, it might have taken me 10 times to go to the right market top, but this is how it goes. I mean, look how long this trend is. Failing a few times to get the market top, does it really worth the shot? The answer is fucking yes, because that's my job to do it. And I think we have decent amount right now of information suggesting I'm probably about to be right. But it's still a little bit early to be sure about this. Obviously, whenever the time comes, everybody will switch bearish. But my job is to be doing this ahead of everyone else. And this is what I just do right now. I stand for my shit, and I think problems are ahead, and it's just getting started. So we're obviously going to have the forex market showing signs of it pretty soon, which means euro-dollar should show some signals that the US is about to head into troubles. So we should see troubles in the dollar, and I think the troubles in the dollar are way ahead of us. We've got strong bearish signals, and everybody thinks the dollar is strong. I think what we have in front of us is just, it's standing in front of us, showing that problems are ahead for the US economy. Even though they've been basically trying to avoid this for a long time, okay? We're just going to remove all the drawing tools right here, okay? Just to set things really clean, or maybe not. We're just going to do this. Okay, so things are clean, okay? Look at this. What do you have in front of you? Just bearish fucking signals, long-term bearish trend, okay? We're just consolidating on that channel, but I think what's about to come next is this. And this is where I think the US is going to enter a recession. Doesn't mean this is going to last for 10 years. It's just said, well, we're going to flash recession, flash crashing on the market, something that goes pretty fast, pretty epidemic. And then we just buy it. We just buy it fucking out. This is the second lesson. Those who think we're going to go crashing and entering deep and long recessions, of course there will be side effects. Obviously there will be some. But the thing is that if you get to compare to this, okay? Sorry, this is NASDAQ. We shouldn't do it with NASDAQ. But anyway, we're going to take it as well. What happened after that drop is a fucking dip that the market had to buy. And I think we're just the exact same example today. I don't think we're going to have a recession lasting for 10 years. I just really think we're going to have a flashing, crashing market going to very interesting buying levels, meaning a 50% drop. We should do it with SPX. But let's say a 35% drop on prices for equities in the US. Fuck it, I'm buying it. Obviously, I'm buying it with an SPX at 1800. Obviously, I'm buying this. It is no question to me. Here is clearly long-term buying prices. So if we go there, even if we go there straight line with a falling knife, you can be damn sure that right here I'll be among the buyers. Really, I will be, and I can be sure about that. So this is the difference between a perma-bearish guy who will just basically say it's always wrong when we go up, and we'll go up for stupid reasons. Obviously, we go up for stupid reasons. This is why the market is meant to be. We're meant to create money out of just nothing. So obviously, it's stupid, and you don't want to overthink things. We're just here to make money. We're not here to change the market. I know it is that way. I'm not fighting this. But when it goes down, I take that as a discount. And obviously, I don't want to buy those prices. Where I want to buy is when we have the discount. I'm just waiting for this to come. I just don't know when, but I think right now we've got a decent amount of information suggesting this bullish wave, this fucking Trump trade is about to be over, and as it has been pricing in stupid prices and stupid future profits that will not make, then obviously it's going to collapse. And the problem is the market structure has been so divergent recently that I think the US are about to have a nasty crash, something that nobody expects, but probably will show up anyway. So I'm just saying the exact same thing all over again. So anyway, I'm going to move out. So dollar should be pricing this thing in earlier. I think we should have early signs of the dollar weakening when we start having some downside pressures on the SPX. So it's just something I'm closely watching right now. I remain bearish on dollar. I just think this is the trade of the year. Selling the dollar and selling the US equities. I could be wrong, and obviously if I'm wrong, the dollar will be stronger than ever and equities will be stronger than ever in the US. But I don't think that's the case. I think this is just a smokescreen. This is bullshit that the guys are trying to sell you to whoever the fuck is stupid enough to buy that. So dollar weakened to me. When we had this back then, okay, should have been a red flag as well. I mean, you don't have that kind of thing in bullish trends. This is where we really reversed the trend. But everybody was just saying, okay, you know what, it's still bullish because this is really a strong bullish trend. This is fucking QE. So this is normal. The dollar has been, this is how it goes, okay? Because euro has been so weak back then because of QE. So this is not normal pricing, but I think this is normal pricing. This is QE winding down. I think we're going to have like a nice bearish leg. Look at the dollar in the long run. Do you really think this is a bullish trend? No, it isn't. And when we're trending to the downside. So you can expect something like that to just play out afterwards. So bearish dollar, obviously not good for the US economy. So we'll see that. Okay, but have a long-term perspective because what we're playing right here is really long-term scenarios. So yes, obviously dollar is going to be the big gamer, but I think the yen is going to be as well. And I've been standing on this for a long time. I think yen each year is going to just fucking rebound. Not necessarily going to the moon. This really sounds more like a ranging asset, but I think we're just going to go there. We've got strong resistances in here. On the GXY. So the yen index clearly should go in near those areas in here, technical areas. And obviously this leads to recession kind of trades. If the yen is for some reason really strong with a very weak dollar, simply means we're going to safe havens. And this is how it goes, okay? So this will be just normal to have a strong yen, a very weak dollar, and US equities just falling apart. But we need the trigger. For now, the market just want to keep on acting irrational, which means every rational decision is wrong-footed. This is why I've been proving wrong since the latest few months. It's just the market is acting irrational. We're no longer trading technicals. We're just trading stupid trades because stupid traders are acting in the market. And that's the worst case scenario. I think noob traders are getting in and they're just going to be fucking ruined. So I'm waiting for this thing to trigger because when it will, I know there will be a lot of money to make. And I just don't want to pick your money. So just make sure you're not getting yourself into that thing. Just don't buy that fucking selling commercial thing that it is that you need to be invested in action, into share. If you're not owning stocks, you're just basically missing the biggest gain of your life. I mean, fuck it, it's just like Bitcoins. Whenever you hear about something, it's the worst moment to buy. So everybody's hearing about Apple and its crazy $1 trillion market cap. Fuck it, this is not the time to buy. It is the time to sell those guys and wait for the nasty part to play its game. So you just wait, we speculate, so we do it as it is until we manage to get proven right. When we will make the breakdown of major support, we'll have to go play the leverage part, but right now, just speculation. If we're wrong, we'll try again the next time. It's just how it is, okay? So moving on, General Electrics showing some kind of interesting bullish signals, on the daily chart. So yesterday was an upper shadow candle, but yet we're still managed to close higher high on the day and we close higher close. We closed there yesterday, so it's a negative close, but still a close higher than yesterday's close, and we broke both the high and maintained the low. So it is not the big and the strongest candle we could have, but this is still a bullish candle. Moreover, because it's happening in a price area that we were expecting to be reacting bullish. So bulls, I think, are in control right here. It could just take us a few more days to work out that area, but I think the next bullish wave is going to be one that is going to be pay us quite. It's going to be quite rewarding. So this really looks like a wave 1. I expect the market to make 2 additional waves, maybe just tinier waves, or we're going to lose strength. It's kind of a possibility. I still don't know what it's going to look like, but I'm just expecting the next bullish wave to be pretty much interesting and just going to show us higher highs and higher lows. So we're basically bite by bite trying to reinstall a bullish sentiment in that market. The momentum is showing signs of this. Next wave is going to be bullish prices, bullish momentum, and bullish cycles as well, I think. So we're just going to wait for this to play its game. It's just patiently waiting. This is a weekly scenario I'm playing on the General Electric thing. So obviously, it can take an extended amount of time to go there. I'm still waiting for that market rotation to go from growth stock to value stock. We're just pending to do it. It's just right now, Wall Street just want to keep the glitters and to keep people awake and avoid the money to just drop out of those stupid growth sectors. So still want to think that growth is there. Obviously, when it isn't, we clearly have the red flags, but everybody thinks we're still having growth on the growth stocks. So yes, I think it's stupid, and there will be a lot of profits to make out of this. But for now, that's the psychology. Keep on doing the growth stocks. Please, please don't look elsewhere. There is no problem. This is really what Wall Street's trying to tell you right now. Don't worry, it's been panic selling, short-term panic selling, but no worries, we're going to crush down the volatility once again and everything will just be fine. No, fuck it, red flags all across the sectors, all across the tech sectors, so you just don't want to be invested in there. But more likely searching for the next move, which is probably the market will switch to value stock instead. So all those value stocks like General Electrics. I mean, look at French guys just gave me another one, ABX recently. I mean, look at that. Clearly was a value stock, and look at this. Oh, great, already made 30% upward movement. You can expect something similar to just occur to General Electrics. These are oversold assets in a bullish market. Obviously, these ones will be will be asked by the market for a return to the mean kind of tradings. So in here, we're obviously reaching the first target. So there needs to be profit taking in here, but we're probably going to go higher than that. So it's just consolidation and probably next bullish wave to come after this. Okay, you can clearly see momentum is breaking to new highs, so showing signs of reversal for that market to show up. So not the time to buy. Really way too late. That scenario was buying at the lows back then. Now we're pretty decently reaching towards to those resistance. And you have a nice example of what a value stock trade can look like. Clearly you can make some gains out there, bullish gains. But this is what the market will probably get to search for. The problem is those valuations represent far less than the fucking guys like Apple's. If you just take 50% out of Apple to get them into ABX, indices will suffer from this. Because indices are weighting the big stocks more than the others. So obviously, if you take down Apple, General, Boeing, Amazon, these are the big names that price a lot and weight a lot into the indices. This is why we might have an indices crisis, because what's been concentrating the money is going to spread it out. This is what's about to come. Doesn't mean the market will terminate and that will go for the biggest crisis ever. But probably, I think epidemic crisis might be down the road, because the price structure suggests that the previous context we've been trading like that was pretty much close to 1987. So here it is. I might be making a video about that. I mean, I took so much fun recently making the videos about the 2014 crash comparison on the Bitcoins, and it's been making a lot of noise into Trading Views communities. But I'm pretty much like I'm going to make another one, I think, on the SPX. I'm going to make that video for TradingView. I'm going to see if it works out there. It's going to be fun. But anyway, you just put a crash word into analysis, everybody's just driving themselves crazy. Even though this is just pure technicals, once again, this is pure technical arguments we have in there. Yes, we have lots of bearish signals. Everybody's ignoring them. And this is just comforting me more than enough. Then we're clearly probably heading toward this. So anyway, I'm going to terminate this right now, as I've made a clear shot about everything. Oh, AUDNZD, we got to talk about this one as well before we're leaving. So we have a daily positive reaction, breaking the highs. We're going to see about the market close today. It is not holding anymore, but a few hours ago we were trading slightly higher prices, and we had a bullish cycle triggering in here with the blue triangle. So we will have a nice double bullish signal if this happens to be the case at the today's candle close. So we need to wait for today's candle close, and we're probably going to have a double bullish signal in here. So obviously something I would like to buy. That's basically all I had to say. So now questions and moving out. All right. Your next video could be, could you show the settings for your Fibonacci range, please? Yes, we're going to do it. I know you did it before. Okay, so I'm going to do it again. So no worries about that. So the range is this, okay? You have to replicate the shaded and the transparency parameters. I'm going to give you the exact colors. You just replicate this thing, okay? It's really how it looks like. So you got the Fibonacci numbers, all right? So you pause the video and you just replicate that. A link to the ticker you use. Yes, the ticker I use is index. That is basically summing up all the major exchanges regarding their volume. Okay, so it's not perfect, but I think it gives a much better representation of the entire market out of exchanges, out of individual exchanges that can have some mistakes, because we have problems in liquidity on some of them, and clearly that is a problem at some point. So we're going to switch to Discord. All right, then you go pro indicators, and basically I think I gave you this to 3 questions, random questions. No, it isn't there. Indicators questions, maybe. No. Strategy questions. I think it's there. Damn it. Can you move on? No. Educational content. Not as well. Where the fuck is it? General, maybe? No. God damn it. Give me a second to find it. Okay, I get that. I should actually have, the problem is mine. I didn't pin it in the US or English section. It is in French, so I'm just going to copy this. It's going to be in random questions. Okay, so I'm going to give you all the formulas you need to copy paste to put into your ticker name. So just going to make that just right away. Okay, so sorry about that. I should have done that earlier. All right, so there you have it. Now it is there. Okay, so you can take this one whenever you need it. So it's been reposted into random questions. Okay, so that being said, other questions. Few incoming mail. Okay, normally I've answered all the emails. So if you didn't got an answer, I suggest you send them over again. As for now, the contact at ProIndicators email address is still not operational. I'm going to set it again. You can just mail me there for the in the pending in between. So it's outlook.fr. Okay, you can mail me there. In the meantime, just for me to set back the contact at ProIndicators email. All right, and thank you, Michelle. So bye, guys, and see you tomorrow.